Okay, good evening, guys. I believe we've waited for people to join and we can start now. So I'm just going to be doing a quick recap of what we discussed in the last class, and I need to make sure that you all can hear me. So if you can hear me, please raise up your hands. Okay, you guys can hear me loud and clear. So I would like someone, okay, I would like someone to actually L- based on what we discussed in the last class, I'm saying familiar faces or familiar names. So I would like someone to just, if you're brave enough, you can just like give and raise up your hand if you want to give a recap yourself based on your own understanding, and we'll know where to come in. Does anybody want to take the stand? Okay, so I'll take it that nobody wants to take it right now, so that's fine. You guys are welcome. Okay. Aurel Lua is raising her hands. Okay, Aurel Lua, let's hear you. Yeah, Aurel Lua, you can put on your mic and speak. We're listening.
Hi, good evening.
Good evening. You're welcome.
So, can I talk now? Because I did not get you. I didn't get what you said.
Oh, I asked that someone should give a brief recap of what we had in, or what you learned in the last class based on your own understanding.
Oh yeah, I said, am I permitted to speak now?
Yes, sure.
Oh, okay. Okay, so based on our last class, it was basically you basically talked about support and resistance and how we can below basic like when we start mapping our support and resistance is the line that we draw below the trend, and the resistance is the line we draw above the trend. And there are sometimes that support changes to resistance and resistance changes to support. And you also talked about how we can map this line by using, how do I put it? By using like the peaks of, peaks of trends. Like if a candlestick goes up and then comes down, there's like a peak that it shows, like it sort of looks like a valley, like a mountain and valley kind of thing. And then few, you pick like a couple of peaks that have the same, that are aligned. You draw you draw the line for the support to the resistance, and we can use this support and resistance to predict whether a trend is going up or is going down. That's basically all I can say for now.
Okay, that's actually wonderful. So, Lua has helped us give a recap of what was discussed in the last class, and you are not far from what was discussed, which means you're paying attention, and that's good. So, yeah, in the last class, I spoke about support and resistance, how to mark out market sentiment. So whenever you go into the market, the first thing you look for is the to know the overall trend of that particular pair you're looking at, whether it's in currency or whether it's in synthetic or crypto. Whatever pair you are dealing with, you have to know the overall direction first before you start filtering your charts down to lesser time frames and implementing all other strategies that you know or you have learned. So So I will be handing over to David in a sec, but based on the assignment I gave you guys, assignment classwork, whatever that you guys contributed to. So I saw you guys work in the group, and yeah, I noticed you guys listened well, and I'm actually impressed. You guys were able to map out correct zones. Yeah, some of you were a little bit off, but overall I could see that okay, you guys could point out good rejection zones and mark it out as your support and resistance. So that's the first step you do when trading. You have to mark out your support and resistance before you now start applying your analysis. You first need to know the overall direction of the market, which is what you guys have done, and you guys did it superbly well. And then also I want to implore you all to keep up your contributions and participations in asking questions, taking what we ask of you serious, like, because if practice makes perfect, and if you do not practice what we are teaching you, then it will just be falling on deaf ears. And I am so glad that I was getting feedback from you guys that attended the class, and that was beautiful. So moving forward, there will be more works for you guys to do to come. So David will be dissecting the chart for you further from knowing the market sentiment. So after knowing this market sentiment, what are the next thing you actually need to do to position yourself in the market to just make profit? As a trader, your goal should be profitable trading. It's not always about the money. It's about knowing the fact that you can control your emotions, go into the market, and be profitable every time. You don't have to be looking to get the big bag right now. You just have to be consistently making profit. And once you're consistently making profit, you can keep increasing your lot size depending on your equity and keep making money. So David will be handling market volume and the likes and help you to understand how to filter the charts further. So I'll be handing over to David right about now.
Good evening, everyone. Like I see that most of us are actually asleep. And like I said, this wasn't our main. We are kind of like behind schedule, but yeah. So, good evening once again. Today I'm going to be talking about. Let me see if you can see my. Let me set up my screen. Let's see. Let's see. So yeah, since already it's actually late already, I'm going to make this quite brief because my other colleague is going to be presenting. Also, is going to be teaching about more about Fibonacci. So I'm going to make this very straightforward and quick. Let me get rid of my camera first so I concentrate. So yeah, today I want to be teaching price direction. Like I said, I think I kind of brushed through this in the last class. And I said that trading is just mainly two things actually: finding the direction and finding the right entry. I mean, if you don't know the direction of the charts, there's basically no entry. So let me show you something. Let me see if I can show you. I'm going to be teaching with my charts. Let me see if you can see it. Hold on. So normally people say that the chart is always in a is always trending. Half the time is mostly trending or ranging. But personally, in my own experience, what I've learned is what I always look out for basically is where is the chart going to? Like where is the trend going? I always look at the trend. Like I said, I gave this example before. I gave this example before that when the nobody's going to be selling sweaters when the sun is out, when it's summer. You understand? Basically, you follow where the market is going to. Is it buying at this point? Is it selling at this point? So I'm going to teach a quite simple strategy that is still at the same time complicated. Hold on, I want to show you my chart. Okay. Let me know if you can see my chart. Can you raise your hand if you can see my screen? Okay. So this is quite a very simple, straightforward strategy. But when you start using it, it gets kind of complicated. But when you master it, believe me, it's like magic. You understand? And if you guys can remember correctly, or if you watched our recaps, I taught you about filter charts and entry charts. You need to you before you trade, you have to you need to know what you are working with. Like I said before, I mentioned all the filter charts and the entry chart. I don't know if someone can come and point it out. Like I said in our previous class, can someone tell me, like, so I know that okay, you guys are actually following, or I should just say it again? Can you tell me at least which one is your entry chart, which one is your filter chart? And okay, for instance, now for M5, which of the time frames is the filter time frame? Can anyone say it? If you remember clearly, if you're in the last class or you found the you watch the yeah,
Um,
yeah.
ba- Basically for M5, the filter time frame would be 30 minutes.
Yes, yes. You can either use 30 minutes or 1 hour.
Wow.
I recommend 1 hour because there's less noise there. You understand? So that is perfect. Thanks, Jesse. Let's so now let's say I pick M5. I'm seeing a lot happening here. And I actually want to okay, let me pick a trend first so we work with that. Give me a sec. And yeah, this strategy I'm about to teach works for everything: volatility index, crypto, forex. It's basically just finding the trend and making entries. So let's see. I think reception is quite slow. I can basically use any chart for this. Let's go back to here. Mm. Okay, in this situation here now, I can see two trends. You understand? So I'm going to mark it out with my so you know what we are working with at this point. All right. Let me get rid of this. Mm, I want to find a very easy chart that you guys can work with before using complicated charts. I think this is good enough. Mm, okay. 1 second. Okay, let's work with this first. So you guys I don't overload you with a lot of information. Let's see. Mhm. Now I'm drawing out a range right here because you have to work with your imagination. Hold on. All right. So basically, we're going to be finding our price direction using trend lines. You understand? And just to brush through, I'll change my screen now. Hold on. So you understand what I'm saying before we move on to the actual deal. One sec. Let's get my whiteboard up. Just tell me if you can see my whiteboard.
I think so, yes.
Hold on. One second. Okay. Can you see my whiteboard? Please signify if you can see it. Okay, perfect. So yeah, now to there are different kind of ways to uh find the trend, find the direction, and one way is um let's see, let me try it out. I'm trying so hard to break this down for new traders. So I'm very sure you actually even saw it now when I was drawing it out. I'm very sure you guys have seen this on your charts where the price moves downwards in this kind of fashion and upwards in this kind of fashion. So basically, when we're working with the trends and you want to find, if you want to know if the chart is actually moving upwards in an upward direction, if you know if it's buying, if you want to know if there is a strong buy volume, this is what it will look like. The price basically form higher highs, higher lows, higher highs, higher lows. You understand? This is what it will look like if you want to, if you are trying to determine a uptrend. Do you understand? Basically, it looks like this until it tires out. This is what it looks like. If you want to find a downtrend, if you want to find a downtrend, if you want to know, okay, if the market is actually selling at this point, if you want to know if there's a strong sell pressure, then this is what it looks like. This is it. This is a downtrend. You see lower lows, lower highs, lower lows, lower highs, lower lows. And each time you see a break for the uptrend, I'm sorry, yeah, for the uptrend, each time you see a break in this particular neckline, you know that it is only just getting stronger. Do you understand? Once it goes down, goes up, breaks this previous neck, you know that it's actually getting stronger. Goes down, goes up again, break this, you know that okay, yeah, it's only just getting stronger. This works for everything: forex, volatility, crypto. Even when you buy like crypto projects and all of that, you know that okay, this chart just keeps getting stronger. If you want to know okay if it's going to keep going up, you see it breaking the previous highs. Now that's the same thing for this, for a downtrend. The same thing happens here. If you want to know okay, yeah, this is actually a very strong downtrend, it keeps breaking these levels. Do you understand? It keeps breaking these levels until it is exhausted. And we are going to come to that until it's actually exhausted. So let me show you on an actual chart. Okay, Scott, you're raising your hand. Do you want to say something? Or okay. So let me show you on an on actual chart. This is real life now. This is not an illustration. Now you see we are on the future chart trying to find the market's direction. And according to this place, you can see that this is an uptrend from this range to this range. Do you understand? You can see that this is clearly an uptrend from here to here. And you can see how it keeps breaking this line. And the more it keeps breaking, the stronger it is. Do you understand? And if okay, now look at this particular point. It's tried to break, but it couldn't. And next thing you know, it's going down. So we're going to get to that too. Now, this is how you find the direction. If you're not sure where to go, where to and what direction the chart is going to right now, you go to the filter chart, you go to higher time frames, look at what it's doing. It's like I don't know if any of us studied biology in school. When you want to look at a what do you call it? I forgot what you call it, but like when you want to look at a solution, a bacterial kind of solution, you kind of like when you zoom in, you see so many things, you see different kind of things going on. But when you zoom out, you just see that okay, this is just a cultural solution, this is just a bacterial cultural solution. You are seeing the bigger picture. So basically, filter chart is just going out, seeing the bigger picture, what is actually going on before going back in and finding an entry. Do you understand? So before we move on, then again, I just want to let me just brush this through. The chart will never keep going up forever. It won't keep going up forever. You understand? It won't keep going up. What goes up must definitely goes down, and what goes down will definitely go up too. You understand? And mind you, I'm not going to be talking about um range here. Whenever it's ranging, it's always trending in a different time frame. So I'm not going to be talking about a ranging chart, which just goes in a range kind of situation like this. But we're not going to be talking about that today. You understand? We just want to find the main direction where it's going to and finding the entries to catch that trend. That is basically what it's about in crypto, FX, volatility, stocks, even. That is how it actually works. You understand? And the only thing, if you master this, the only thing that can actually make you lose in any way is just market manipulation. And when you master your risk management and psychology, it's way I mean losses won't really get to you because you know that okay, yeah, you can easily make this back because you know exactly what you're doing. Now, like I said, it's not going to keep going up or it's not going to keep going down. The exhaustion points, we can use indicators to determine that, to spot it, or we can use just normal price action. You understand? So for instance now, let's say this keeps going up and you see something like this and like this. That is basically a double top. You know that okay, it has reached an exhaustion point, it's getting weak. Do you understand? It's getting weak at this point. You know that okay, yeah, buying at this point is not really wise. That is one of it. Another thing is whenever it's going up, there's always a trend line. I'll teach you how to draw your trend line because this is very tricky. There's always a trend line, and when you see the price breaking through this place, you know that okay, it is getting weak. Your mind is okay. Let me look for a sell opportunity. Mind you, again, you don't just sell or buy. Also, make sure that okay, yeah, there is a buy or sell volume too. That's one I'm going to talk about it also. So yeah, price will never keep going up. It will definitely go down, and this is one way to spot if it's going up or going down. Once all these rules are broken, you know that okay, there's a big news incoming, a serious news affecting the whole country, or manipulation. And manipulation, it's not like manipulation happens all the time. You understand? Sometimes when you see manipulation, that's when like I said, if you were following the first class, there are some times where you trade back to back and turn that your little money into life changing money, and there are times where you sit down and do nothing, go and do other things, work with, do your hobbies, spend time with family, all of that. Do not touch it when you see that okay, things are not going as it's as planned, it's not really going smoothly as it used to. That is when you see, that is when there's manipulation in the market, and that is when you stay away from your laptop, don't do anything, wait until it is better again. I mean, when under risk management, when we talk about it later, I'm going to talk about when you just test the markets, maybe with demo trading, try and test the market, see how it's going. If it's not really going well, leave it. When you see that okay, everything is going smoothly as planned, as you have taught you, then that's when you go and start trading, go all in. Even I'm just joking, but never go all in. But then again, that's when you actually trade. You understand? So same thing with the downtrend. It never goes down forever. There's a time where there's an exhaustion point where it forms a double bottom, or sometimes even triple. This is the part where you know that okay, this is about to go back up, or when it breaks the trend line. This is where you actually look for a buy opportunity. I hope um hold on. I hope you understand so far. I think my whiteboard was lagging. I hope you understand so far. Should I go through it again? Do you have any questions so far?
No,
So,
I understand.
Oraoluwa said you should go through it again. She didn't get it.
Okay, okay. I'll go through it again because I think my whiteboard was lagging. I think my whiteboard was lagging. So I'll go through it again briefly. Let's see. Let me clear all of this. So can everyone see my whiteboard to be sure? Okay. I'll start from there. Okay. Okay, let me start from there since you're the only one. So now, like I said, the uptrend to you don't the charts, the price don't go up forever. There's an exhaustion point. You understand? There's a point where okay, the direction of the price changes. One of the indicators is a double top, something like this. When you see something like this, there are so many indicators by the way, but when you see something like this, you know that okay, yeah, it's getting weak. You understand? And then again, when you are trying to find your uptrend or downtrend, there's always a trend line that follows through the price that the price bounce from. So this particular trend line, once it breaks and goes down to this level, you know that okay, it's weak also. You understand? Also, I can teach you the divergence that shows weakness. Also, when you say divergence, that's another way to define weakness or exhaustion when the price is going up. Same thing when the price is going down. When you see something like this, a double bottom or triple, sometimes something like this, you know that okay, yeah, this is time for the chart to go up. Or when it breaks the trend line that follows through the price, in which the price bounce through. When you see a break, that's when you know that okay, yeah, the price is getting weak. Like I said, we're also going to be talking about the divergence to know when the price is when the price direction is actually getting weak. Done. So I hope you got that now before we move to the main chart. Did you understand what I just said now? And if there's any question so far, you can you can tell me.
Yes, thank you.
So any questions so far before we move on to the real deal? to the main chart. Any questions so far? Let's see. Okay, so we already talked about trend weakening. So now let's see, let's go on, let's move on to the main charts and try to catch some signals using this strategy. Please tell me if you can see my screen because this lags sometimes. Hold on. Okay, tell me if you can see my chart.
Yes, we can see your screen.
Okay. So if you can remember everything I said, okay, now we are going to be working with the uptrend. I just saw an uptrend here on the H1 filter chart. And like I said before in our previous class, for the H1 filter, we can use M3, M5, and M15 for our entries. Now, it is obvious that this is an uptrend. Do you understand? This is an obvious uptrend. Now, we have to go to our filter chart to find possible entries. Now, for this particular study, I'm going to be using price action, plain price action. I'm not going to be using indicator. I'll also teach you how to use some indicators to catch some signals when trading, when trying to trade the trend. So let's see. Let's use M5. If you notice, I put like a boundary. Hold on, sorry. See how this on. I put a boundary where the uptrend was. So I'm going to be trading around that area. So yeah, just to clarify something, let me show you my whiteboard again. Just to clarify something, when trading an uptrend, it's not compulsory you just buy. At this point, you are taking risk whether you're buying or selling. Do you understand? But it's not it's not compulsory you just keep buying from here. Anytime you just see a bounce or you see a buy opportunity, you buy. Trading, just buying in an uptrend just increases your chances of profiting. Buying or selling, all is the same thing. It's still you're still taking risk. But then again, it doesn't mean you can't sell at points like this. Do you understand? You can find the sell opportunity. For instance, now it goes up. Let's say it goes up, goes down, goes up, and goes down. You know that okay, this is actually an uptrend happening. You probably caught a trade here, a buy opportunity around this area. It went up, you profited. Now, a new high has been created. It's broke here. Obviously, it's going to go down again. You can actually find an opportunity around this area, sell it here to this down part. Normally, when I sell, I kind of um end it. I don't hold it for too long. I end the trade at this neckline, at this line here, something around here. I end the trade there. I don't care if it goes lower. My focus here is buying. I want to just keep buying. So yeah, you can still find an opportunity, a sell opportunity whenever you see one before um before the market exhausts around this area. Before you see an exhaustion point, you understand? You can still sell. So moving on to the main chart again. Please tell me if you can't see my screen. Signify. This stuff keeps lagging for some reason. Can you see my screen?
Yes.
Yeah.
Okay. So
Yes.
let's see. Let's see if I can use price action. I don't know if I should jump into price action immediately because some of us still need to Okay, so now we're in M5, our entry chart. Mind you, when you go lower on this chart, you can still find smaller trends. Can you see this? Can you see all of this? You can still find smaller trends happening. It's like you're zooming in. Do you understand? You can still find all of this happening. Mind you, this is in the H1. This is in the hourly chart. The one where I put okay, hold on. Okay, this distracted me. Okay, this part distracted me. This is not it. Let me make it red so we don't get distracted again. Second, I'll set this up real quick. Okay, this is what we are working with. Please, as I'm going into M5 and 5M, 5 minutes short now, I'm only zooming in this area. This is what we are working with right now. In case any of you are confused, this is what we are working with right now. This is an uptrend, and we are trying to locate buy signals. Now we are going to M5. I'm done. Okay. Now look at this. Okay, give me a second. Okay, I hope you guys can see my screen. Now let's try and catch some signals. Now we have determined the trend. Do you understand? I don't want to put up indicators yet. I want to break this down as simple as possible. You understand? So now just imagine we found the trend here, and we're trying to get let's say catch a signal, maybe around this area. Around this area. Let's push this aside a little bit. Okay, and okay, I've not taught everyone price action. I mean the hammer, different kind of candlesticks. So I think let's just talk about let's use indicators to actually take signals here, because that would be different. That would be for the next class. Since you guys don't know much about candlestick patterns, it will be confusing. So I'm going to be using a popular indicator to catch signals at least, so you can use that one to practice for starters. Can you see my screen clearly?
Yes.
Yes.
So I'm not going to be. I actually wanted to use price action to catch some signals, but I've not candlesticks. I've not really thought about candlesticks. So this would be, let's just use indicators for starters, so you get my points before we move into price action. So yeah, now we know that okay, this is going up. This is an uptrend. The only time you get, and this is actually very um this shouldn't even be free self, but there's no issue. So yeah, now this is an uptrend, and one way to actually catch these signals is, I don't know how, if you guys know how MACD works, but I'm going to show you how it works. I don't know how let me see. Hold on. I feel like this is more straightforward. So yeah, this MACD works like to break everything down. Once a cross happens, it shows a bullish kind of momentum. That is the perfect indicator for finding volume. Understand? It's a perfect indicator for finding buy and sell volume. So once there's a line separating, there's the up part and the down part, and a line separating both of them. When you see something like this happen, crossing below, you know that okay, this is an actual buy signal. And when it's crossing above, you know that it's a sell signal. So one way to find perfect entries is by using this indicator. Now we know that this is an uptrend. We are still going to do some analysis even after zooming in. Now let's see. Let me find the perfect example. Let me find the perfect example. Um okay. Let's see. Hope this doesn't get too confusing for any of you. Now this was a ranging situation right here. This was a ranging situation right here. And soon a breakout happened here, and we can find a trend. Do you understand? Now there was this short downtrend that was happening in here like this. Although I wouldn't take it. I won't say okay, I want to sell because this is going to be very short-lived. Understand? It went here, went down, hit again. This is like a very a downtrend happening. And like I said before, when you zoom in, you see other price action happening. You don't just um jump into a trade and buy because you saw that okay in the bigger time frame is buying. No, you actually have to do some analysis. Since you are zooming in, you have to find trends here. So now I found the trend here, like what I said about downtrends. I found the trend happening here in this situation. Now the only thing I'm looking for here, since I already know that okay, this is an up trend, the only thing I'm looking for here is a breakout. You know what I said before? Let me go back to the whiteboard. Now look at this. It went down. And I told you when it's getting weak, it breaks out here. You understand? So this is the same thing I said before, and it is happening live here. I hope you guys can see my chart clearly. It's happening live
Yeah.
here like this. Now the breakout happened. The breakout situation was here. Where's my this thing? Well, the breakout actually happened here. If you can see my mouth clearly, it's happened here, broke out, and this is what happened next. Now, this is a very good example of this is an uptrend situation, only buy up. Sure, when this trend happened here, it went down a bit, but this was short-lived. It didn't even go far from here to here. Now, when the breakout happened and you saw that okay, yeah, it signified the end of this downtrend, which was here. It started flying up. I mean, it kept going up. Now, as it was going up, it started forming higher highs. Let me see if I can mark it. Where's my okay? Let me just mark it with some X. It started forming higher highs up here. If you can see it, do you understand? It started forming higher highs, which shows that okay, this is just going to keep flying. Now, if you can see it clearly, if you bought at this point here on the breakout and you put your stop loss inside the trend line again around this area, you can see how far it went. Can you see how much money you would have made from here? So apart from that, I talked about the MACD also. Now that it is going up, and maybe you missed this area, this entry right here, you can also enter through here. Now the MACD crossed this line, this zero level line here. at this point, and this was the entry right here, and it flew up from here too. So it didn't only give you this entry, but also gave you an entry here. Do you understand? It gave you another chance to go, and you can only play around like this only when you know the trend. You can't just do this anywhere. Do you understand? I hope everybody understands what I'm saying so far. I feel like it's really getting complicated. Is there any questions so far?
No question yet from my end.
So everyone understands what I understood what I just said. All right, great. So now we are going to talk about. I'm going to find one more entry, then we move on to the next thing because I think I've already spent over 40 minutes on one topic. I'm going to find one more entry to make sure everybody understands. So hold on, let me see. Now let's find one more entry. Let's say we miss both sides now. Do you understand? Let's say we missed both entries, the breakout and using MACD. Um, and we're trying to enter again. Let's see. And then again, I suggest when trading, please do not use your phone to analyze. I know it can get addictive, especially when you're making profits, but do not use your phone. It's way better to use your PC to analyze. Now look at this. Let me show you a very good example again. Now this was a very good uptrend that was happening right here. You understand? Now a breakout now happened around this area. See what happened? It didn't even last. The movement didn't even last. It just went a little bit, then went back up again because there is still up pressure until it got weakened around this area. So ignoring all of this, that's okay. I think I found another entry. I think I found another entry. Let's say, okay, this was a trend line. This was a trend happening in this area. That is one. I can see an entry here for quick profits because I think the charts, the price started getting weak at this point, right here. Started getting weak at this point here. So this is where the trading actually stops. Now there is a there's even a smaller trend here, right in this corner, right here, like this. Do you understand? This can be very tricky, like I said, and we are still going to go over it again. So if you want to find another entry, there was a small trend happening here: lower low, lower high, lower low, lower high, lower low, and there was a breakout that happened here. So if you actually caught this trade here like this and put your stop loss around this area, I mean, you can see how much you have made from here to here. You can see the profit made from here to here. This is why it is very important to find a direction first before you say, okay, you want to just make entries. The breakout happened here and it went up like very clean profit. Now you happen to miss that breakout and you're like, oh my god, I want to find another entry. So what the MACD did here, it crossed below in this area. Do you understand? It crossed in this area happened here, and boom, you didn't miss out on anything. So trading is actually it's technical, yes, but if you keep learning and trading, you would, like I said in the previous class, it's like going to print from the market. You actually have to calm down. That's the thing. You need to calm down before you get all of this. And you can easily miss all these entries if you are just rushing. You understand? Just the way you walk, I don't know, just the way you walk, like calm down and walk. You actually have to calm down and look at the charts. Trading is like learning a new language also. You need to actually practice before you can spot these points like this. It seems easy to just spot a lower low, higher high, all of that. But when you actually trade, it's quite technical. You understand? People actually make millions from this. I mean, if not, it won't even exist to this point if it was just a scam. You understand? Now, looking at this, hopefully by now you'd have known that okay, yes, this is actually is deeper than it seems, and it's actually very, yeah, it's technical, but then again, yeah, you can still make a lot from it if you know exactly what you're doing. So yeah, just to round up, I just want to brush through something again. Give me a sec. So far, is there any questions so far? Did I say do you find anything complicated so far? Are there any questions? I mean, this strategy I just gave you, honestly, if you are a quick learner, you can use it with other strategies. I mean, just having a filter chart and entry chart is one step ahead. You're you're way ahead of other new traders that just want to start learning how to trade. You understand? Just knowing about the filter chart and the entry chart, finding direction, then entries. That one is there. I don't want to um talk about trading counter entries. Having counter entries for now, trading against the trend, because for new traders, I do not even suggest you do that. So yeah, before I conclude and brush through, is there any questions so far? Any questions so far before we move on?
So the one question one more, I don't think it's a question, but just to also like confirm, after you're done with your analysis, you still have to stick with the normal um idea of waiting for the market to react before you actually like take your trade, right?
Yeah, yeah. Okay, come again with the question, so I'll be sure.
So in the last class, we were informed that after all the analysis is said and done, all our filter analysis, looking for entries to actually take our trade. One of
Yeah,
the most important things to always take note is you should always wait for a confirmation from the market first to actually probably see the buy volume or the sell volume before you actually enter that trade. Does that
yeah,
also still apply when you've
yeah,
done all
yeah.
these
It,
many?
yeah, it applies. So that is a very good question. That is a very good question. So let me brush through something before we move on. Let me show you something. So if you want to be extra careful with your trades and you want to, okay, maybe this week, oh, I want to have a very good win streak this week. If you want to be extra careful, there's something you should also apply. Now let me mark my entries where we took these trades. Let me see. Let's say here. Tell me if you can signify if you can see my chart so you don't get confused. So I'm going to mark entries like this. Let me change the color so you don't let me use a different color. And then let's make it black. So this was our first entry. Now let's go back to our filter chart. One of the indicators I use to measure volume, buy and sell volume, is the MACD, MACD. It's a very strong indicator, by the way. Now, if you want to be extra careful, you can take risks like that and say, okay, yes, I'm in an uptrend. Nothing's going to go wrong. Do you understand? But if you want to be extra careful, using this particular indicator as a volume measure is actually wise. So now look at this. If you notice from this level here, you know that okay, yeah, there's a buy volume. The indicator already crossed, the blue line already crossed the red line, indicating that there's buy volume. Do you understand? At this point, yeah, sure, you're going to miss a few pips, a few moves, but you know that for sure this thing is pumping. This price is actually pumping. I mean, see how big the move is. I mean, just this small move alone, I know how much I'm going to make. Now, look at this. See this volume here. As it crossed, you know that, okay, yes, this thing is going up. There's no doubt it is actually going up. Now you let's go back to the entry chart. I hope you guys understand the entry and filter charts. So because it can get confusing for new traders. Hold on. So now if you go back to the entry chart where we entered here, compared to when the volume started picking up, maybe I think it's around here. Yeah, we lost a few pips. But at this point, you are very sure that okay, let's say around this point, you're very sure that this thing is going up. And at that point, there's no chance of a drawback. Do you understand? So that's how volume is important. If you want to be extra careful, although you already know what the trend is saying, you could just enter here on the breakouts. Do you understand? But if you want to be
Yeah.
extra careful, you wait for volume to pick up on the filter charts. That gives you that final assurance that okay, this chart is going to definitely pump. So funny enough, it started pumping when it's crossed, when volume started showing. So it's just like you missing a few pips just for being extra safe. So I don't know if I answered your question. Yes, it
Yeah.
is important. It is important, but then again, you can actually overlook it. You understand?
Okay.
I recommend people use this because especially when they're over risking and maybe they want to just flip quick. They don't flip like quick cash, like they want to just flip their money fast. You can actually use it for extra confirmation, wait for volume, wait for buy volume to come in. You understand? You can also use the 30 minutes time frame for that volume. At least you see that okay, volume is picking up. Now I can buy. Or you can DCA, that is dollar cost averaging. You can be buying bit by bit. And when you see that that volume is popping up, you can now go all in with your full percentage, risk percentage. You understand?
Yeah. Yeah. Totally. Thank
All
you
right
for
now.
that.
Yeah. So that's one way to be safe. That is just you being safe. That's just if you want to be extra safe while trading, knowing that okay, yeah, so this this is definitely going to go up, then you can do that. And like I said, you can DCA. You see a breakout, maybe your percentage. Let's say you have $1,000 now, and you want to be trading, let's say $100 per trade. And let me go back to the chart. Let's say the breakout happened around this area. Let's breakout happen around this area here. You can start with $20. It goes up a bit. Put another $20. Goes up another $20, goes up again. And now you notice that there's volume picking up here in H1. Notice volume picking up here. You see the MACD crossing. You now be like, okay, yes, definitely this is going to pump. Then you now go all in with the remaining money. And this happened. That is like the safest, most patient way to trade. You understand? So yeah, is there any question? Any other question before I finalize? I round up. Is there any other questions so far? And in case you have questions,
Hope you
I
guys have been
recommend
understanding so far.
yeah, so I recommend everybody jot everything down in case they have questions for later. It looks quite technical for starters, but believe me, it gets very easy later. It gets very easy to draw out all of this. So just to finalize something, let me use my read charts to do this. This is an uptrend. Do you understand? This is what you call an uptrend. This right here. Let me circle it. Let me use this. Did I get this? A second. This right here is an uptrend. Here, like this is an uptrend. This is also an uptrend. This right here is a downtrend. This right here is actually a downtrend. And mind you, whenever, and also, yeah, this is an uptrend. Let me see if I can find one more downtrend. This is, why are there so many uptrends now? Okay, let me just use this as an example. Now, this, let me zoom in. You can see how I caught this mega downtrend, this dip that happened. 1 second, let me show you. I want to show you how to accurately draw this trend. So when you notice, okay, this was part of this uptrend, so I don't want to connect it. Okay, now when you notice that, when you notice the trend, you must make sure when drawing it, you must make sure the first two tops connect. I don't want to say the remaining is not really your business, but then again, you just have to make sure the first two connect like this. No matter what, it has to connect. Once the first two connect and the price breaks the line, that's when you notice, okay, a new trend is starting. Same thing here. You get your trend line. Make sure when drawing your trend line, the first two connect. The rest don't exactly matter. You just make sure the first two connect like this. Definitely, there are going to be some fake outs, but just make sure at least the first two connect. If the first two is not really connecting, then the trend is not safe. It's not actually a trend in most cases. So make sure the first two connect like this, because it's important to know when it's actually breaking out. You understand? So I'm going to still in the next class we're going to talk about entries with candlestick patterns. We're talking about the hammer, bullish shaharami, bearish shaharami, shooting star, all of that. We are going to be in the next class. We're going to be talking about how to make entries using that. This was just plain price action and using the MACD indicator to find entries. So yeah, I hope you understand that so far, because it will be very important in our next class when we talk about using um um what do you call it, candlestick patterns to make our entries. So finalizing, I'm going to, since there's no time anymore, I'm going to just call on Tayo to brush through quickly on his own topic. It's going to be a quick brush through. So in our next class, it's going to go uh in depth in what it really entails. You understand? So yeah, Tayo, you can come in now.
All right, good evening, everyone. I hope you guys can hear me.
Yes, we can.
All right, so sorry, I want to share some slides. David, can you please stop presenting? All right. Okay. Sorry, please give me a minute. Uh, all right. So We would be discussing Fibonacci again today. I know I brushed through it last week, and we'll be going more in depth with it this week, so you guys can like understand it, know how to plot Fibonacci, where to look out for, what exactly to look out for when you're trading with Fibonacci. So the thing is, actually, this strategy, you can use only this strategy when trading. Some people use only this and candle patterns, because Dave discussed it earlier that we're going to treat that. And when we treat that and you add it to Fibonacci, you can see that it's also a strategy you can just use, and you can use candle patterns as a confirmation. Because I know last week I said that no matter how much you're trading, no matter the strategy, you actually need some sort of confirmation, because market the edge you can have against the markets, the thing that has that high probability to win. So basically, that's just it. So let's dive into it. So Fibonacci retracement levels are basically horizontal lines that indicate the possible support and resistance where price could potentially reverse direction. I know I mentioned this last week, and that's the whole scope of Fibonacci. It's just to like trace out zones where price can possibly reject. That doesn't mean price cannot break those zones. It can break it. It's just zones where you just watch out for if price is approaching for a possible reversal. So let's go to the next slide. To find Fibonacci retracement levels, you need to find the recent significant swing high and swing low. I'm going to talk on this swing high and swing lows, and I think Dave also talked about it in just a few minutes ago. And also the charts I used to give an example last week, I still left the Fibonacci drawing there, and I'm going to open it after a while to show you how price actually reacted to those places. I know where the chart was when we talked last week, and you'll see how price reacted to it over the course of the last week. But before that, let's take this picture for example here. So as you can see, this is a swing low and this is a swing high, and I told you that once you're drawing your Fibonacci, your point zero must be at the recent, and that's for this example here, you're plotting it to the swing low, so your zero must be at the swing high here, while your 100, sometimes you can see it as 100, sometimes it is 1.0, but if you're using trading view, you're going to go to the 0 point, 0 point, and 1. So the 0 will be at the recent swing high, while the 1 will be at the recent swing low. It also applies vice versa. So if you're taking it from the swing low at the beginning for a previous swing high, you're going to put the 0 at the swing low, then the 1 at the previous swing high. That's if you're doing the other way around. But for here, we are dealing with a swing high, a recent swing high, and a swing low. So you plot it. So you have the 0.236, 0.382, 0.5. If I trace this 0.6 down, you're going to see that it is around this region. And that's where price came to touch and continue going up. You can see that this 0.61 is actually a very good level. But now let's see how price reacted to this Fibonacci zone here. So as you can see, the price did not get to this 0.618 actually. It actually rejected from 0.382. And you can see that I told you that before you take a trade in a Fibonacci zone, always wait for that confirmation. Like you can see, if you took the trade while it just touched the zone, you would have most likely been stopped out because price still further went down before going back up. So it ranged around this zone. If you just kept gambling, you would have just been losing for no reason till it came back here. Then it showed a rejection on this zone. Then it started flying back up again. When we teach more on candlestick patterns, you're going to understand why it was even better to take the trade here and not here. So we'll dive into that later during the course of the boot camp. So basically, Fibonacci is just to get zones where price can possibly reverse from. So I'll be changing the screen now to the chart we used last year, for example. Let's say last week, for example. That is actually going to help because it's going to be plotted the charts last week. So now we're actually going to see how price reacted over the course of the week. So please hold on. Okay.
You'll be joining the meeting back shortly. I think he has a reception issue.
Sorry about that. I had a very slight issue. So let me open the charts now. All right. So this was the chart we were using as a reference last week. And hold on, please. The price was here. Here when we were taking the lecture, this exact candle here. Let me zoom in so you guys can see properly. So now the price was exactly here when we ended the class last week. Now, based on this, you can see some levels where price actually reacted to without even talking, because we ended the class here and the week. Let me put a vertical line to just make it clear. This was exactly where price resumed from for the week, and this was the whole week's movement. Now you can see that we ruled it from the previous swing high as 0 to another swing low. That's the point 1, and this was where we ended the class last week. Now you can see that price moved into the 0.786. Now the thing is, if you're ruling it this way, doesn't mean price doesn't respect the level if you're going the other way. Once you rule your Fibonacci, and maybe let's say you're planning for a buy and you rule your chart and you rule the Fibonacci, doesn't mean if price is trying to sell, we should also respect those levels as well. Because you can see this 61.8 level, it was ranging there, showed a rejection, fell. Also here, you kind of ranged there, showed a rejection, and he bought the same exact zone with the same exact drawing, but price respected that zone in 2 places. One sold, one bought. So ruling Fibonacci actually helps you a lot because it just brings out those levels where price can react from. Doesn't mean price cannot respect it and go the other way. So as you can see, he actually came to this zone, then broke it with this candle, kept flying up. I'll still point out the fact that price reaching somewhere doesn't mean you should immediately take it. You should wait for a confirmation before you take a trade, because this is a level he respected here and he rejected. But here he broke it, came to this 0.5, broke it again, and came here, almost broke it, but he showed a rejection. Then he fell all the way back to this 0.618, and he showed another rejection candle. Then we went up. Now the thing is that if you came here and you bought, you would have actually bought it at a very good price and you would have made profit. But the thing is, What if he actually broke it down? Because here now, this is a level you could have sold. This is a level you sold from here. If you sold, you would have lost. It came here again. If you sold, you would have lost again. So there is no, you don't try to outsmart the will play on your character more than you think. Hold on. So it came all the way to this 0.618. Now it came back up to this point.
Tayo, can you come back again?
All right,
Can you come back?
can you guys hear me now?
You
Can you hear
went
me
off.
now? Can you hear me now?
Yeah.
So what I was just trying to say then was, don't try to outsmart the market. Just follow the market. Your money does not mean anything in this market. Honestly, we don't have the funds to move this market. All we can just do is play by the rules. Don't outsmart the market. Just follow a strategy and just stick with it. Don't be greedy as well, because trust me, the moment you're losing is when greed comes into play. And all these things are just to try and minimize the loss. So you're not going to have too much emotions when you're trading. So as you can see here, price came back all the way here to this 0.618, came to 0.5, broke it, came all the way here where it rejected here, broke it again, came all the way to 0.236 and broke it as well. It rejected a bit. It didn't even come back to this zone before it started flying back to this 0 point where we rode. And this point, this level that I ruled last week is actually a very, very good resistance. As you can see, that's where price touched and is almost rejecting again before market closed. So basically, yeah, in Fibonacci, just find the swing high, the swing low, draw the Fibonacci. I will always advise to extend the line so that it's not going to really disturb your chart. And as you can see, this was where it ended last week. And even from what we did last week, I'm still going to leave this Fibonacci here, except price further breaks this part and keeps going up. But as long as price doesn't break that and price goes down, you would notice that all these levels that are here, this 0.23, 0.3, you are going to notice that it is going to respect a lot of those levels, even if it's going down. So it's just to show points where price can reverse from. That is all this thing is just about. Mostly, what you just mostly pair Fibonacci with is simple price action and candlestick patterns. Mostly, because honestly, it is going to work for you. A lot of people use only this. I know someone that he only uses Fibonacci to trade. Fibonacci and price action. So although he adds a little bit of fundamentals inside, that one is something we are going to talk about, but not a lot of people use fundamentals, and it's fine. But it's just advisable that you know it while trading. So it's just going to help you position yourself properly, know when to leave trades. Because trust me, you can see that this price was going up and it sharply went down. Let me switch to the 1 hour on this chart. You can see that price sharply went down before going back up. This is just manipulation and is news. That's where fundamental comes into play. This what you see here is manipulation. And trust me, if you're not careful and you're poorly positioned and all those news come out, you're going to be stopped out. The thing is that you might be right. Your position might be right. Because honestly, if you're in a buy here, you can see that eventually you were right. But this manipulation can take you out if you're not careful. So the fundamental part of it is something I'm going to treat later on, and it's very, very important. And I think Scott talked about it when we were discussing, and he brought out Forex Factory. It's something very, very important that you guys have to follow while taking trades, even while you're inside trades. So you know how to properly position. So yeah, back to Fibonacci, yeah? So once you rule from your swing high to your swing low, all you just need to do is just watch out for those levels and wait for reversals. Please, I'm going to say it again. Don't take trades because price is touching all these lines. Do not take any trade because price is touching here. Take the trade when price is reversing from those places. Like it has reversed here, like it reversed here, like it reversed here as well, like it reversed here as well. Wait for the reversal. Don't take a trade unless it is reversing, or else you're going to have yourself to blame. It is not even that hard. And in trading, you're going to deal with a lot of emotions. So sometimes you might just look here and feel, oh, okay, the price might just fall from here. You might be right. Like this now, you would be right here. But trust me, you might also think it will fall from here. You might also think it will fall from here. You might also think it might fall from here, but it just kept going up. So don't try to outsmart the market. The market is going to run if you're in or you're out. So always try and play it safe. The point of trading is to break even in profit, because you're going to lose. You're going to have losing trades. There's nobody you can show me that has a 100. If you see anyone that tells you that they have a 100% win rate, those are the kind of people you should run away from, because it's not possible. Even the pros lose. The point is just to break even in profit. And I know I gave an example last week that when you're trading, if you lose 7 times, but you win 10 times, see that 3 wins that you have on average is something. It's a lot. If you have $100, you're risking 10%. You win 10, you lose 7. You've made $30. If you apply that logic on $130, you see that when you start compounding, that money is going to mean a lot. As little as 10% can mean a lot when you start compounding. So the point of trading is always to break even in profits at the end of the day. You're going to lose, and you should prepare yourself mentally for that. You're going to have losing days. You're going to have days that you'll win. And also, once you're losing, you need to learn to just stay off the market. Because earlier this week, I was discussing this with Dave earlier today, that during the week I was trading and I had a very good week, month. That was around April, entering May. I actually grew confident, and this week, trades started going bad. And I kind of overstretched it. I didn't even know when to stop. But actually, after 3 days, I noticed that if I don't stop trading now, I'm actually going to lose the entire account. Basically, everything I've worked for last month, I'm just going to lose it if I don't stop. So you're going to learn to stop trading when you start losing. It's not every time you will trade. And this is something I know Dave used to mention. It's not every time you trade. Once you see that the market is not going in your favor, just step out. Since that this market, there will be times where it will come back and to go your way. That's when you would come back to the market again. But if it's not going in your favor, just step out. It's just that simple. It's not every time you will trade. You win or you lose, this market will still keep running. That's one thing you should know. If you're out, you blow your account, you're making $100,000, this market will keep running and it's not going to wait for you. It doesn't give 2 shits about your emotions or anything. It will keep moving. So all these things we are discussing here is just to put you on a safe path and to put you on the right path, that no matter how it goes, you're still covered. You're still going to break even in profits, because that's the whole point of trading. So when we discuss about candlestick patterns, you understand and you see ways to know that, okay, yes, there's a reversal here. I can take this trade here. You will learn to know how to plot your stop losses, your take profits, because all these lines as well can also act as stop loss and take profits for you. For example, now you can enter this trade on this breakout and say, okay, since this 0.0 is a previous swing high, that's where I want to take profit. And if you had entered the trade here or here, at the end of the day, it's reached your take profit. And you can say your stop loss is probably below the swing low. And you can see that if you enter the trade here on this breakout till you got your take profit, it never even came close to your stop loss. So these lines can also act as a take profit and stop loss, and even trailing stop. We'll discuss more on that in the in coming weeks, because if you took the trade on this breakout, it came back down, it went back up, you can put your stop loss here. If it came up here again, you can put your stop loss here. As it came back up, you can put your stop loss here till just to be protecting profits as you're riding the trade. Because it's something that you would need to learn to do. Because trust me, there's no point of being in profit if you don't at least take some or all of it. So, and again, the trailing stops will also teach you how to place the trailing stop, because you cannot say you're, let's say, 2 or 3 pips in profit, you already move your stop loss. It can hit your stop loss and go your direction again. So all these things, you need to apply wisdom in the whole thing. So you just put your stop loss here on the previous low. It just keeps going up. You never touch stop loss. You can put it on this low again till it reach your take profit. You never actually touch your stop loss. Trailing stops again doesn't mean price cannot hit it though, because you have a trailing stop does not mean price cannot come and hit your. For example, now this trade, if you are taking the trade and it went all the way here and you're moving your trailing stop, let's say you put the trailing stop around here or around this point 0.786, you can see that it will touch your trailing stop and still go in your direction again. So there is no bulletproof strategy, there is no bulletproof way to trade. Everything is just to reduce the probability of losses. That is just trading. Once you get that in your brain, you will be able to trade properly. Trading is not about finding the perfect strategy. No strategy is perfect. No strategy is going to assure you 100% profit. 90% profit self is far-fetched. 80 is even far-fetched as well. No strategy is going to assure you 100% profit. You're just going to do it to a point where you're going to break even in profit. That is just it. Put that in your mind. Once you put that in your mind, you'll be able to trade better. Back to Fibonacci again. Once you have these levels drawn, let me extend this again. Here, you can see that this also respected this 0.5. You can see that almost every, let me extend it again. See, this 0.768 was respected here as well. Once you rejected, it flew up to the 0.0. Once you rejected here, it flew up to 0.0. You can see that from this 0.236 is the spot, is a range where price most likely fell from. Once you see rejection, once there was a rejection, it fell. Once there was a rejection here, it fell. Once there was a rejection around this zone, it fell. Once there was a rejection around that zone here again, it fell. You can see that price is actually interacting with this zone a lot of times. So once you rule your Fibonacci and you can identify proper candlestick patterns, you would almost have a very high, very high win rate. As long as you follow the rules, as long as you're not trying to outsmart the market. Because the thing is, once you wait, another thing I need you people to understand is, once you wait for confirmation, you're going to get late entries most of the time, but it doesn't really matter. Because at the end of the day, once your profits, once you know where you're targeting, late or early entry, the point is you've made profit. That is just it. Because here now, if you had entered at this point, is a better entry, but the confirmation came on this candle, which is going to be later than entering here. But the point is, you were sure that yes, there is a rejection and price actually followed it. If you guess, if you try and guess in some places, like now, there, if you put last price came here, came back up here, you might guess that okay, let price go down. Price actually went down. You might think, oh, fine, I was actually right. But honestly, it came back up again, broke it, and kept flying up. So the summary of this strategy is get a swing high and a swing low, rule your Fibonacci, identify the levels, which are the 0.76, 0.61, 0.5, 0.382, then wait for a rejection. Wait for the rejection and don't guess. Once there's a rejection, take your trade and just ride it. If you lose, wait again for another zone. Wait for price to approach another zone. Watch how price reacts with the zone. Take the trade in accordance to the strategy. And honestly, you will not have any problem. You can decide to trade, start your trading journey with only this. You might even stick to it forever, and you would actually make profits with only this. I used to tell people that a lot of strategy in Forex actually works. The problem is just you as a human being. You are always the problem. A lot of strategy works, but once you can sort out the grid part, you would have flawless results, and that is just it. Trading is not hard. Actually, trading is not hard. What makes it hard is your emotion. It's just that simple. And also, another thing I always advise people to learn while trading is risk management. We're also going to discuss that. That will be like one of the last things we're going to discuss, because once you have proper risk management, you know, even if you're losing, it will not really matter, because you know that on the trade you're going to win, you're going to make back those losses in one trade. That's why we're going to talk about your risk to reward ratio, and you understand that You might lose some, but one trade that you win might bring back all the losses. So we'll talk about that at the last classes of the boot camp. So let me go over it again. In summary, Fibonacci is just to rule out your levels, wait for a rejection, and take the trade in accordance. It is just that simple. Don't complicate it. Don't guess. Don't try and outsmart the market. You are only going to do yourself. And at the end of the day, you will just see that you're living trading as a whole. Because I have friends. The person that brought me into Forex has left trading because of greed. There is no how. If no matter what you know, so far you cannot control your emotions, that know when to start, know when to stop, know when to wait, know when to be patient. So far you have those in check, then you've solved half of your trading problems. Basically, I will tell you that for a fact. So that's all about this for today, and we will talk more about it in the coming weeks. So right now, I would hand over to Dave to continue.
Okay, good day, guys. Hope you guys understand everything that has been shared today. David has shown you guys how to spot trends in the market, and also how to use MACD indicator to support what you're saying, and also to find entries as well using the MACD indicator. So okay, so far so good. Coffee. And Taya has also explained Fibonacci, how to understand it, how to wait for the market to react before you act. Coffee asked that question earlier on, and I'm sure you guys understand that you always have to wait for the market to act, to react to whatever is happening before you act, because fundamentals are at play. And in order for you to stay profitable, you need to act based on the market reaction. You don't just enter and think that your small money would move the market. Just like T.Y. said, no, it would not. Your small money has no play in the market. You're talking about $1 billion, $1 trillion market. Oh, $6 trillion market, over $6 trillion market daily. So your $100, $1,000, $10,000, $100,000, $1 million does not move the market. The big banks that are moving the market are putting billions of dollars into just a candlestick to manipulate it the way they want. Do you get? So you need to understand and know when to spot this movement in the market. And as this class is going, you would understand it better. So you just have to take it easy, step by step. You understand the trends, you know when to enter and when to come out, when to spot a breakout or a fake breakout, you know when to spot all these things. So until the market reacts before you act. So in light of that, if anybody has any question, you can just drop in the comment section or drop it in the group chat, wherever suits you, or you can unmute your mic and ask your question. Let's answer it and wrap it up. Okay, Orolua, you can ask your question.
Okay. It's actually a quick question. For this Fibonacci, are we? Is it going to be on the? I don't know if you're going to be using a filter chart and an entry chart, and if we are going to be using, is it going to be on the filter chart or the entry chart?
You asked for the Fibonacci, right?
Yes.
Yes, you can use your Fibonacci on the entry chart, because your Fibonacci marks out the levels for you. So, especially rejection levels. So, for you to know where you are likely to enter and come out based on the market possible reaction zones. So, it is your entry chart to use it on.
Okay. Thank you.
So, is there any other question? Okay, I'll be handing over to David to just say a few things before so that we close it for tonight.
So yeah, that's basically everything for tonight because it's already late. We would be talking more about this. There will also be another extension, and that will be the last for this topic. So next week we're going to be talking about candlesticks, more on entry and price direction, because that is basically before you use any strategy you see online. That is one thing you must know. Any strategy you see, always apply um, price direction, and also entry charts. Also find your entry chart and filter charts. So yeah, that is basically it. Next week we'll have our last extension class talking about the same topic, and I hope everyone understands so far, and I hope everyone is practicing um so far, because you can't just, the truth is, you can't learn this overnight. You actually have to keep practicing. Like I said, this is like learning a different language. Like learning different, when trading is like learning a different language, so you have to keep practicing, learning to you. Whenever you open the charts, you know exactly how to analyze in few seconds without actually looking at the chart for too long. So yeah, this will be the end of today's class. Thank you for coming, and can't wait to see you in our next class. There might be an additional class for next week, so we'll let you know during the week just in case. So good night. Can't wait to see you in the next class. Good night and goodbye. One more thing. If you have if you have questions you couldn't talk about here, you can text it in the public group. Yeah, our giveaway to start. I've actually been watching, and we have our eyes on some of our members, some people that joined. So next week we are going to be starting our giveaway event. So yeah, try to be active next week. I will see you in our next class. Thanks for coming. Good night. God bless.